Good day and welcome to Rainbow Children's Medicare Limited Q3 FY2024 earnings conference call, hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jeewani from IIFL Securities Limited. Thank you, and over to you, sir.
Good morning, everyone. I am Rahul from IIFL Institutional Equities. I welcome you all to the third quarter earnings conference call of Rainbow Hospitals. From Rainbow, we have with us today Dr. Ramesh Kancharla, Chairman and Managing Director, Mr. Sanjeev Sukumaran, Group COO, Mr. Vikas Maheshwari, Chief Financial Officer, and Mr. Saurabh Bhandari, Group Business Analyst. I will now hand over the call to the Rainbow management team for their opening comments. Over to you, sir.
Thank you, Rahul, and very happy New Year to everyone. I hope you all had a splendid New Year celebrations. It's my pleasure to welcome you to our earnings call for the third quarter and 9 months of the current financial year. On the operations front, the current quarter performance is relatively lower because of various reasons like a delayed onset of monsoon and inconsistent rainfalls. As such, both the second and third quarter performances have been relatively lower compared to the seasonally strong Q2, Q3, historically what we witness normally. Although the third quarter mirrored the previous one, our proactive measures taken in the second quarter to streamline costs have paid off. However, the specialty services, which includes the pediatric super specialty services, obstetrics, and tertiary care services continue to do well through the quarter. We encountered disruptions due to cyclone Michang, which affected operations for about 10 to 15 days in Tamil Nadu and Andhra Pradesh, impacting our facilities in Chennai, Vijayawada, and Visakhapatnam. Despite these environmental headwinds, our company has achieved its highest revenue and EBITDA numbers, demonstrating our operational and financial resilience. Turning to the financial specifics for the third quarter, we have witnessed a positive growth across the board. Our revenues increased by 9.6%, reaching 335.9 crores. EBITDA grew by 10.6%, amounting to 118.1 crores. And PAT rose by 7.4%, reaching 62.5 crores. For the quarter under review, our occupancy rates stood at 50.8%. Highlighting specifics, our matured hospitals recorded an occupancy of 57.6%, and our new hospitals reported an occupancy rate of 37.8%. Indicative of the nascent stage of their growth trajectory, and also an effect of cyclone at these new hospitals in Tamil Nadu and Andhra Pradesh clusters. So, moving to expansion plans, I'm happy to share that we commenced operations at our 8th hospital in Central City, Hyderabad, with 60 beds on 4th January 2024. With this addition, Rainbow has a bed strength of 890, comprising of 1 hub and 7 spokes in Hyderabad city. This will further strengthen our group hub and spoke network in Hyderabad. Our new spoke hospitals in Ananagar, 80 beds, and Sarjapur, Bangalore for 90 beds are in concluding stages, so they will be inaugurated sometime very soon in next few weeks' time. The project work for the additional block at Hydernagar, 50 beds in Hyderabad, is in concluding stages. Will commence operations within this quarter. With these additions, we are on course to add 280 beds in the current financial year as budgeted. Project work at the Spoke Hospital at Ennur, Bangalore of 60 beds and a regional greenfield project of 100 beds at Rajahmundry, Andhra Pradesh. The work is progressing well and are expected to commence operations towards the end of the next financial year. So we have signed up for a new greenfield hospital in Coimbatore of 125 beds. The builder has received the permissions from the government agencies, and the project work will soon commence, probably in February. The status on NCR land parcels remains the same as that of the last quarter. We completed 100% payment to HSVP and land parcels for 2 land parcels in Gurgaon and received the allotment letter for these land parcels. Efforts are underway in collaboration with governmental entities to secure possession of these parcels. Simultaneously, we are working actively with the architects in planning and designing of these 2 hospitals. So we maintain a confident outlook, envisioning that these expansions will strengthen our presence in growing cities of Hyderabad, Bangalore, Chennai, and the National Capital Region. Beyond our growth plans, I would like to shed some light on significant achievements that underscore our dedication to pediatric healthcare excellence. Our commitment to advancing quaternary care has shown tangible results. In the first 9 months of this fiscal year, we successfully completed approximately 685 cardiac surgeries and procedures, along with 55 transplants, including liver, kidney, and bone marrow transplants. I would like to present a few clinical scenarios which demonstrates our clinical excellence. A 6-month-old infant was airlifted from Raipur to our hub hospital in Bangalore. This baby was suffering from severe renal failure and high blood pressures as a result of hemolytic uremic syndrome. It's a rare medical complication of E. coli toxins post-diarrheal episode. So our team promptly responded to the parents' request to airlift the infant and was taken care in pediatric intensive care under the supervision of a pediatric nephrologist in Bangalore. This baby was severely unwell and required ventilation, number of plasma exchanges, and dialysis. The baby recovered fully in 2 weeks' time and was discharged back to Raipur. In another clinical scenario, the 10-year-old child presented with an episode of left-sided seizures. This child was evaluated by pediatric neurologist, and an MRI demonstrated an arteriovenous malformation with a clot, with a blood clot on MRI. After discussing with parents, patient underwent immediate neurosurgical excision of the arteriovenous malformation. Post-operatively, the child recovered very well without any neurological deficits and discharged home in 4 days' time. In another clinical scenario, there's a 4-year-old child was referred from another pediatric hospital in Hyderabad with a severe breathing difficulty with significant stridor for 2 weeks duration. Since this child was in and out of the hospital as an inpatient and was not improving, referred to Rainbow Children's Hospital for specialty care. This child was initially evaluated for various causes of respiratory distress and was suspected to have an obstructive upper airways. Therefore, the CT angiogram demonstrated a pulmonary sling. This is an anomalous pulmonary artery compressing the windpipe. The cardiac surgeon at our cardiac institute performed reimplantation surgery to connect left pulmonary artery to main pulmonary artery with a end-to-side anastomosis. Post-surgery, the child improved significantly from breathing difficulty as well as stridor. With these cases, I want to emphasize that the need for multidisciplinary care for pediatrics under one roof to deliver excellent clinical outcomes. The company has also taken a noble initiative of performing health checkups of marginalized people affected by Cyclone Michang in Chennai and surrounding areas. With this, I would like to pass the mic to our Group CFO, Mr. Vikas Maheshwari, to take you through the financial update. Thank you once again for joining us today. We look forward to your questions and insights as we move forward. Thank you very much.
Thank you, sir. A very good morning to all of you, and thanks for attending this teleconference. I'm happy to brief the financial performance and the key developments of Rainbow Hospitals for the third quarter and the first 9 months of financial FY2024. Our operating revenue for the quarter stood at 335.9 crores, reflecting a growth of 9.6% when compared to the corresponding quarter of the previous financial year. For the first 9 months, our revenue stood at rupees 955.8 crores, reflecting a growth of 11.6% when compared to 9 months of the previous financial year. Our EBITDA for the third quarter amounted to 118 crore rupees, marking a 10.6% growth compared to the same period last year. For the 9 months, our EBITDA stood at 323.3 crores, reflecting a growth of 8.4% when compared to the first 9 months of the previous financial year. The EBITDA margins remain steady for the current quarter at 35.1%, while for the 9 months our EBITDA margin is 33.8%. The profit after tax for the quarter is 62.6 crores, marking a growth of 7.4% in comparison to the corresponding quarter of the last financial year. The increased depreciation expense to the tune of approximately 4.5 crores is mainly towards the new units impacted PAT growth. For the 9 months, our PAT stood at 167.2 crores, reflecting a growth of 5.5% when compared to 9 months of the previous financial year. In terms of the operational performance, both outpatient and inpatient volumes for the quarter remain steady with a growth of 1% respectively when compared to the corresponding period of the last financial year. The reasons are already well explained by Dr. Ramesh CMD. Deliveries which are independent of the seasons grew by 3% compared to the corresponding period of the last year. Our payer mix continued to remain robust and balanced for the quarter, where 50.4% of the revenue coming from the insurance and the balance 49.6% coming from the cash patients. For the 9 months, the payer mix stands at 50.4% cash and 49.6% as the insurance. Furthermore, our international business was approximately 3% of our total business for the third quarter and approximately 3.4% for the first 9 months. I am pleased to inform that our company's balance sheet remains very robust with a net cash position of rupees 495 crores as of 31st December and will support our ongoing capital expenditure plan as outlined by Dr. Ramesh, Chairman and Managing Director. Given our current cash flow and anticipated internal accruals in the coming years, we remain confident in our ability to complete all planned capital expenditure through internal accruals without any debt financing. During the quarter, the company has invested approximately 60 crore rupees in the capital expenditure. With these insights, I conclude my financial update. I now invite questions and suggestions from the participants. Thank you very much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, good morning. Thank you for the opportunity. So first question, while occupancy has been significantly lower this quarter on a year-on-year basis, our margins have been fairly resilient. One reason can be the strong ARPOB growth and lower ALOS. Are there any other reasons which led to margins remaining relatively steady in this quarter?
Thank you, Alankar. I think it's so what's happened is that definitely normally Q3 will be very strong on the seasonal businesses. So because of there is no season at all because of various reasons, untimely rains and also shortfall of rains, various things. There was let's put it this way, it's fairly healthy year. So we do see this kind of years, but following up very busy years, so fairly quiet year and a healthy year. So that way, what is kind of a business went on very well is that your tertiary care, super specialty pediatrics, obstetrics, and also the quaternary care, which is growing significantly with the transplant business, all those things. So that is all the high ARPOB business. When you have the almost a flat or lower seasonal business, your ARPOB automatically goes up, which we have been witnessing in the last current quarter and also the previous quarter. So that's actually been pushed up. And also, as you said, the relatively lower ALOS plus the case mix of superior case mix are the two things which have actually pushed up the ARPOB. In a normal scenario, we would see that kind of getting moderation of the ARPOBs in the second and third quarter because of the seasonal business, which has not happened this time.
Understood, sir. Anything on the cost side which you can highlight, or basically it was business as usual in this quarter on the cost side?
We have been disciplined because we sensed it in the second quarter itself that it's the year likely to be a kind of what happens is by the time we know August getting into September, we will know exactly how to forecast it. That's actually kind of as I said earlier in the call, we have been kind of very disciplined with the costs and also kind of various other measures kind of taken kind of to adhere to kind of expenditure budgets.
Understood, sir. So, and my second question is, quite a few hospital companies have highlighted about a higher cost of construction and equipment in the last few years. Can you update us on how the per bed capex requirements for us across greenfield, brownfield, and if you can break that up across hubs and spokes, how have these capex requirements per bed changed in the last few years?
I think we have not done the greenfields in the last 1.5 year time. What other hospitals have come up in the last 1 year is about financial district and also the hospital in Himayatnagar. It definitely has gone up. We have not concluded completely the total project yet. Definitely it has gone up. I would guess that probably up to 20% it would have gone up. This is my sense. Maybe I'm not sure about the greenfield project, whether it has gone up even further because of cement and steel. The brownfield projects, it's kind of my expectation between 15 to 20% run up on the costs because everything has gone up, including the lighting fixtures, electrical, all the MEPs, cement, steel, everywhere it's gone up.
Understood, sir. I have more. I'll come back in the queue, sir. Thank you.
Thank you.
Thank you. The next question is from the line of... A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Nitesh Dutt from Burman Capital. Please go ahead.
Hi, thank you for the opportunity. I have a question regarding our occupancy levels this quarter. So, sir, are some of our newer hospitals cannibalizing some of our mature existing hospitals? And also, is there an impact of increased competition for some of our hospitals and due to which the occupancy is lower?
Yeah. I think definitely there will be, when you do hub and spoke model, there will be to an extent of the patient movement happens because of the proximity between the two hospitals. Okay, people choose to go one of the hospitals. That happens, but we recover it. We recover within kind of a 9 to 10 months time because of the adding in new patients to us. This has been a scenario we've been witnessing for a long time. Second thing is that yes, competition in this sense. Definitely, there is a increased awareness of children's health care. A lot of the smaller children's hospitals, not to the size of Rainbow, the smaller 15, 20 beds, 30 beds children's hospitals are doctors grouping together and doing some hospitals. These have definitely increased. So as move forward, that hospitals like us will kind of do more of a complex work, and also some of the kind of the patients which are nearby to those hospitals will definitely go to that one. May get into the kind of a little more organized. Right? Earlier they were going into the nursing homes, they might go to pediatric hospitals. Second important thing is that the referrals from the districts. Obviously, the neonatal and some of these about 250 neonatologists per year comes out within the country from the training. And also there are a lot of people are moving to districts because of more trained personnel available. So that would kind of start looking at, they will start doing some degree of intensive care in the districts. That will also reduce some of the borderline things like, the babies who are, 1.5 kilos or 1.2 kilos. People who are less than 1 kilo only tend to come to the main city. This will happen over a period of time. But the market size also increasing and the awareness is increasing. This is a balance between the supply versus demand.
Understood, sir. Thanks for that. Second question, is it possible for you to provide occupancy data or at least occupancy trends by city? And lastly, what is the expected normalized occupancy levels going forward if you have a view there?
Okay. So if we go back and look at it, last year we have clocked about an average occupancy about 55.6 or something. And this year occupancies have obviously come down because of the seasonality and also the healthy periods, long healthy periods, and those are the things. What we see is at the group level, we look at it kind of occupancy above 55%. And also we're adding beds constantly. About each year we're adding about 150 beds. Perhaps this year is going to be almost 280 beds are going to be added, which is almost like a 25% for the beds. So that will dilute. So I think what we aim and look at it is that matured hospitals occupancy of north of 60. And the overall consolidated occupancy is about 55. We would kind of do extremely well in terms of providing a quality care as well as financial performance. Because we have some, unlike multi-specialties, we have some differential areas in the children's hospitals. And also we cannot keep them in the areas which we are not supposed to. An ICU is very restricted. Intensive cases are very restricted. Isolation wards are restricted. We can't keep the children mixed with the women. So there's a lot of other restrictions, which is why that our occupancy levels, 55% at the group level is pretty good to achieve our, to post the best of the results.
Got it. So can you provide any city-level occupancy trends, for example, what happened in Hyderabad, Bangalore, Chennai, etc. this quarter?
We looked at it actually, what is the best way of presenting ourselves to as a company, as a kind of group. It is we constantly kind of adding more beds, doing a hub and spoke models. What we felt is that it's a kind of a matured and maturing hospitals is probably right way rather than taking a city view and approach, which kind of each city is different. So that's how we stuck to it. We have tried to look at it, but I think this probably gives you a better forecast of future.
Sure. Thanks for the answers. I'll get back in the queue.
Thank you. The next question is from the line of Rishi Modi from Marcellus Investment Managers. Please go ahead.
Yeah. Hi, so can you hear me?
Sir, your audio is not clear. I would request you to use your handset, please.
Is this better?
Yes, sir. Please continue.
Yeah. So, just wanted to get an understanding from the RPOP growth, how much is an impact of mix change versus price hikes?
I think the price hike what we have taken is in the beginning of the year. As the year panned out, as I earlier said, it's kind of more of a quality of a case mix and shorter ALOS. The less of a seasonal business pushed up the RPOP probably by kind of about 5-6% more. So usually what happens is that if we look at the occupancy, it's almost 9% down. So that moderation of occupancy, which is dominantly of seasonal business, definitely pushed up relatively RPOP high. This is a kind of more of a balancing which we have seen of RPOP increase. There's no significant price hikes being taken in between, and it's more of a quality of the business because more of a specialty pediatrics and surgical and the quaternary care and the intensive care work plus obstetrics. All these things have kind of have a in a pediatric health hospitals higher RPOP business.
Understood. Secondly, just wanted to get an understanding with 220 beds coming in Q4, how much of the fixed cost will get upfronted, and then how will the occupancy rates pan out for these 220 beds over the year? Like, if you can give an understanding out there.
Sorry, would you mind repeating the question?
Yeah, so basically what I wanted to understand is that you're coming up with 220 beds in Q4 this year. So how much of a fixed cost upfronting will happen on account of these beds? And secondly, how will the occupancy rates pan out for these bed additions over the year?
Rishi, this is a good question. So as we onset for the 220 beds opening, so what is happening is that if you look at the breakup of these hospitals, is the Hydernagar, which is just an expansion, and we are opening the new beds for meeting the new requirements and the demand basically. We don't think any cost pressures to come on that. As far as the another hospital, which is Himayanagar, which is in Hyderabad, and that is what is, our stronghold, and we don't expect much of the fixed cost or the operational losses to come on that. We expect these two units, which is opening in Hyderabad, constituting roughly 110 beds, should do well. In a very short period, they should break even. As far as the opening of the Sarjapur and Anandnagar is concerned, we have always guided that these markets will take some 12 to 15 months time for the break even. And we believe that we should be on those track. Okay, got it. So if I would get a per bed fixed cost versus per bed variable cost for you guys, how would you split your cost between fixed and variable? See, in hospitals, if you bifurcate, it's all operational costs, because if you look at doctors, paramedic staffs, nursing costs, this is the major cost, right? And then there is the pharmacy and consumable, which is more or less is a variable cost basically. Or some part of the doctor's cost is fixed cost, some part of the nursing cost is fixed cost. So on average, we are not expecting, if they achieve 3 crore rupees of the revenue per month, right, we should be there at break even there, including all fixed costs and the variable costs. Okay, 3-4 crore revenue per month is break even for you all. We should be break even, yeah. Okay, got it. And finally, your ALOS has kind of had a step down. So just wanted to understand, have you done anything on the clinical side to reduce the ALOS and hence improve the capacity utilization for existing beds? It's actually more or less is the issue of what type of cases coming to the hospital and what is our operational efficiencies, right? How fast we can treat the kid faster, recover the kid faster, or the mother case gets recovered faster and we can discharge that, right? So it's a question of a little bit of operational efficiency also. So I think this ALOS, what we are seeing is 2.58 for the 9 months. I think the range should be from here, it should be between, 2 to 3 is the ALOS. We should budget depending upon season to season. Right. Just if you could highlight one or two
operational steps that you have taken to improve the ALOS, so that an understanding of how you all are thinking about it?
In a hospital like us, with the children and women, so absolutely the patient discharge is going to be very, very important, because this is all people who are very active. One is child to keep once is recovering phase itself we plan for a discharge because anticipated recovery by next day. Even the same with the young mother. So very, very different healthcare scenario, because in the children and women hospitals, because people tend to wanted to or tend to request for discharge very early, which we also promote it, which is why our ALOS have been 2.6 to 2.7, the best of the scenario 2.55 to the 2.7. It hovers between those two. This has been trend the last 6-7 years. I don't think it would improve. It would go beyond 3 unless we start looking at very long-term patients of post-surgical, or even the transplants nowadays. We are discharging them on the 12th day, 14th day. So that's how the children.
Okay. Got it. Thank you. That's it from my end.
Thank you. The next question is from the line of Prashant Kuti from Sundaram Mutual Fund. Please go ahead.
Hi. Thank you for the opportunity, sir. Just one question over here in terms of when you can highlight about the occupancy being lower, but just to understand a little more about the mature hospitals. Any reason as to why the occupancy goes down so sharply, typically in a quarter like this, which is considered to be a season quarter? Is it only the reason of floods which you highlighted, which impacted the occupancy, or anything else to read into it?
Well, in the children's hospital, whether even the matured hospitals are actually get affected on seasonal variations. Why it happens is that in a season, even intensive care gets busier, and the complications will increase, so the specialties get improved, and also surgical work goes up also. This is the same scenario you see in multi-specialty also. When the season comes, especially with some of the, like in the past, dengue, in the past, we are the COVID. So the increase in the occupancies will happen across the board. Not only in terms of the wards and those things, and also increased footfall for the patients and the outpatients. It's a multi-dimensional. Season is not just but there will be more of a ward admissions, occupancies goes up, but it pans out to across the board improving the numbers.
Sure, understood. Also, secondly, in terms of your capacity expansion plans, could you probably just outlay in terms of is there any change happening on that front? If you could probably also speak a little bit more on the Delhi part of it, because there is one part which you used to be very confident about in year 2025. So any changes happening from that perspective?
CAPEX plan, sir. Any change in the CAPEX plan?
I think that in terms of the CAPEX, as we earlier were discussing about it, there is definitely cost of the beds have gone up.
Yeah.
And also even our CAPEX plan is, in terms of the additional beds remains very intact. Whatever is we proposed, the expansions in the newer geographies, like in a regional hospital in Rajahmundry. We signed up in Coimbatore, which is going to be started civil works in the next month. And there's a hospital going in, work is going in Hennur. In Delhi, 2 hospitals are in the pre-project phase. We've gone for the drawing board for the designs, architectural designs. We have still got a few things to sort out with the government before registering, and meanwhile, parallelly, we are working with architects.
Sure. And last point, sir, in terms of and obviously the RBOPs have gone up, just want to check with you, are there any insurance-related hikes which can probably help the pricing going forward? Just want to check in any of the places, any insurance-related benefits which might probably help in terms of the pricing?
See, most of the insurance tie-ups have been done in the last in the current financial year time. So they've all signed up for 2 years. So it's very unlikely to see that any price hikes through the insurance this current year, in the coming year, current year as well as the FY2024-25. So the new hospitals, if you can get the insurance tie-ups quickly, so that will kind of be bonus for us. So we're working really kind of in various existing clusters in Hyderabad and Bangalore, Chennai. We are persuading because insurance companies to kind of list these hospitals, empanel these hospitals sooner than later. Otherwise, they usually take about 6 to 9 months' time. We are actually trying. We are successful in Hyderabad. We want to kind of see that has happened in Bangalore and Chennai as well.
So suffice to say that the pricing will largely be driven by your mix, case mix itself incrementally as well, at least for the next 1 or 2 years to come.
Yes. Yeah, sure.
Thank you so much. All the very best to you.
Thank you. The next question is from the line of Himanshu Binani from Anand Rathi. Please go ahead.
Hi. So good day, everyone, and thank you for taking my question. So I have just 2 questions. Number one, on continuing with the previous participant's question on the capex per bed. So can you please provide us with the absolute capex per bed number for both the spoke and the hub hospitals? And if at all there is any sort of like variation in case of the greenfield and the brownfield projects?
So as far as the capex is concerned, whatever we have guided, there is not much of the change. Hub and spoke models. So the hub and spoke, whether so whatever we have guided based on the inflationary trend which we have seen in terms of furnace fixtures, medical equipment, and other ancillary equipments, whatever the pressures we have seen is the pricing of roughly 15 to 20%. So as on date, when we speak the hub and spoke, particularly the projects which we have announced, this should cost between 65 to 75 lakh rupees per bed.
Okay. And sir, there is any sort of like variation in the spoke and the hub, or the cost is same?
Pardon, sorry, your voice is very blurred actually.
So your voice is muffled. If you're using your Bluetooth, I will request you to kindly remove it for some time to only ask questions.
Definitely the hub hospital will be a little more expensive because of the equipment, various things.
Right.
Same time, it's because of the size, the number of beds also get increased, so that optimizes. Still, we always take about 15% of the higher capex for the hub hospital.
Got it, sir. And so the second question was, pardon me for this question, basic due to my limited understanding of the sector. So what I can see is that the average length of stay that has come down while the ARPOB has increased, and one of the factor for the increase in ARPOB was the better case mix. So what I wanted to get a sense is that if the cases are complex or complicated, then that would result into a better ARPOB growth. Then how come the average length of stay has come down? So maybe if you can give a sense on that.
The average length of stay, when you look at the obstetrics, it's extremely low. Obstetrics, which is one of the best performing this year. Obstetrics, the average length of stay is less than 2. The second important thing is the surgical side also, average length of stay, we have condensed it from previous year to now. The pediatric surgical, which the volumes have increased significantly, most of them are done minimal access surgery, so their are also low. And the other thing, even the transplant work which we have been doing, which used to go for 3 to 4 weeks staying in the hospital, is come down to almost 11 to 13 days in the recent past. So the once some of the babies which comes to us for the critical illnesses, they get treated and also get transferred to the local, the district sharing hospital, because we have a lot of shared care hospitals, which they send the patients to us for the critical part of it. We send them back for the convalescence or healing phase of that. All these things are put together is one side. Another one is that when you don't have much of seasonal component of that will get kind of moderated that will actually give us an extra push to increase our ARPOB. Mm-hmm. So these are the combinations. Price we have taken the last year. We have taken the last year price hike. So I think the insurance has already been, like if we go back on our earnings calls last year, we had a very impressive price hikes for Bangalore, Chennai, as well as to Hyderabad. So that's really given us probably a kind of a pricing advantage, which will continue for this year and the next financial year also.
Got it, sir. And so, can you again quantify on the quantum of price hike which was taken on a consolidated basis, and what is the frequency at which we have been taking price hikes?
So it's linked with inflationary link. It should be between 6 to 7% on an average.
This we take on a yearly basis?
Yeah, depending upon we also react to the competition pricings. We'll benchmark and study that what the other hospitals are doing, and based on that, we take a decision on that. But yes, it should be linked with more or less on the inflationary impact.
Got it. Thank you.
Thank you. The next question is from the line of Karan Gupta from Varanium Capital. Please go ahead. Mr. Gupta, I have unmuted you. Yes, sir.
Yeah, hi. Good morning. Now audible?
Sir, you're audible, but it's a little bit muffled. If you could use your handset to ask question.
Yeah, using the same.
Thank you, sir.
It's better now?
Yes, sir.
Yeah, so...
sir, we lost your audio, actually. It's not coming now.
Okay, the overall industry is expanding and all the players are getting aggressively expanding in terms of bed capacity. So, do you have any figure or any data related to the doctors, right? On an average, how many doctors or pediatricians getting graduated? So, just wanted to understand the sense of the supply side or the availability of the doctors in this segment.
See, we are specialty hospital, so for general supply may not be much, because for someone to become a consultant in our hospital, so we actually look at more of European standards. So they have to be at least 5 years post-MD to be a consultant Rainbow, in the pediatrics, to be a pediatrician Rainbow. So we do train a lot of people within our system as well. Our focus of taking the pediatricians are very, very less. There are a lot more supply there for us rather than having a difficulty in recruiting them. Where our interest and focus is more of intensive care group with the neonatologists and pediatric intensive care, and the pediatric super specialties like neurology, nephrology, gastroenterology. This is where we look at the demand and supply. Things are much better now than what it used to be 15 years ago when we were initial days. There are a lot of training centers, including ours, because if there is the 3-4 centers in the country train pediatric neurologists, we are one of the centers. So we do actually produce significant number of specialty doctors, which we are always kind of trying to retain about 30% of them within the system. And we recruit people, significant numbers from outside the country who are trained, because who are pediatricians done in this country, who gone out to UK or Canada and who specialized, want to come back. We give them opportunity to join us.
Okay, so you need permanent doctors. You don't work on the contract basis or maybe kind of case-to-case basis.
No. Now, we say Rainbow is absolutely a full-time doctor engagement for long-term career, and this is how we position ourselves. We do not have too much of moonlighting, short-term contracts. These or even partial contracts also we do not encourage in the mainstream pediatrics and pediatric specialty areas.
Okay. Because why I'm asking this question is when everybody is expanding in terms of bed capacity, right? So, and doctors' availability is less. I think some of the reports saying that only one doctor is on over 100 patients or maybe 1,000 patients. So is it right? I mean, because this will, if you extrapolate this thing over the years, this will maybe impact on margin or your maybe ARPOB will reduce over the time because supply constraints will be there in terms of doctors and you are expanding in terms of bed capacity. So
I'm not sure what is trying to link it. With one number of doctors would reduce. I mean, I'm sure I'm not able to really understand your question.
More hospitals, more expansions, more beds, but availability of doctors is less.
Yes.
I think, see, this is one of the reasons. Rainbow, with the balance sheet, we have cash on the balance sheet. I could do 500 beds a year next 5 years' time, but I'm not doing it. So we are limiting about 200, 250 beds a year. One of the reasons being is it's not only the doctor. This is an execution of the full-time model, and also for the clients, the digitally native population, the young children. They are the people. So they need to buy your model. You need to demonstrate skill sets and the ability to provide high-quality care for the community. Then they start looking at us as a fellow. This is a process which takes about 2 to 3 years' time. In a new city, it will take about 3 years out. So therefore, it's very important that we look at all the factors of execution. Execution isn't not project execution; it's a medical execution of building this business. It is an organic business which we have to build. Unlike a multi-specialty, there is no wear and tear problem which are readily available. So this is more of a kind of an emergency-based specialty, which is driven very strongly on the kind of shoulders of the doctors who are very well qualified. It's not the number of doctors, it's kind of what kind of quality and skill set they have is more important.
Okay. And the second question is related to what's the payback period in hub and spoke model, as you said, and what's the traction you are seeing from other mother and care hospitals that they are referring their patients to you guys? Or what's the steps you are taking to increase this traction?
I think there is a lot of voice noise here to, come nearer to your phone or something like that. Some voice disturbance here. Could not understand your question.
So, Mr. Gupta, may we request you to kindly rejoin the queue for follow-up questions, please? There are other participants who are waiting for their turn. If you could, please.
Sure.
Thank you, sir. We'll take the next question from the line of Kunal Dhamesha from Macquarie Group. Please go ahead.
Yeah, thank you for the opportunity. So first one on the business model optimization. So as you have alluded that for mother and child care, the optimum utilization or occupancy could be between 55 to 60% given the requirement of NICU isolation, etc. But let's say when we are coming up with new hospital, are we seeing any optimization, as to probably increase the NICU beds or something which could lead to probably higher occupancy in those newer hospitals?
Yeah, definitely. There is a lot of definitely. Obviously, there's more qualified doctors coming in, and there's definitely going to be a more hospital. Not as a probably children's hospitals, more the mother and child segment is actually because which is low capex and also easily replicable. More of a kind of boutique centers. Those are things will keep coming up. They will definitely reduce number of referrals who are actually, for example, the over and above 1 kilo babies. But these hospitals will not be kind of able to provide care for very extreme prematurity, the babies who are less than 1 kilo, babies who are complex. They require larger systems. So, in a way, in a short run, actually what we see is that there may be a kind of the decrease in number of referrals, but in the long term, what happens is more complex will come to you because when you position yourself as a kind of tertiary quaternary care hospital, then the awareness becomes more, and even the people kind of becomes more aware of what is to be done, where to go, which hospital to go. The choice, they choose hospital more wisely. So the market also will increase in kind of size. All these things happen. This is dynamics. This is how we have seen a multi-specialty has grown in cities like large cities in the country, where 4 or 5 groups have kind of built a huge number of beds in all the 4 or 5 cities. So market increases significantly with awareness, and also the affordability going up, insurance segment going up. These are all tailwinds which are going to push overall. It cannot be just one Rainbow Hospital covering for entire Hyderabad, any of our cities. So there has to be multiple number of players will definitely come up. There will be some competition. Eventually, what is important is that who provides the better clinical outcomes and good results. They stay as a premium. That will be well regarded and respected. That's what we have seen in Hyderabad. So the number of hospitals are there in Children's Hospital in Hyderabad. Not only now, for the last 7-8 years time, because of resounding success of Rainbow Children's Hospital. But we continue to dominate and do well because people know that which is the hospital to go to when they become sick beyond a point.
But sir, my question is more on optimizing the model itself in a way that, right now our optimum capacity or occupancy we are expecting is 55-60%. Would you be designing the new hospital in such a way that we can go up to 70-75%, probably changing the mix of,
Yeah, you're right. Actually, if we, for example, some of the mature markets like Hyderabad, we have increased the capacity number of beds. Right now, we increased capacity of beds in Secunderabad to 50 to 100 a couple of years ago. We increased some beds capacity size, going to increase in Hydernagar, which is an additional block. We are building it to the existing block. So there are two ways about it. Do we do a very large hospital in the beginning? And it's going to be a huge capex, and also as a spoke hospital, there are some limitations, some certain geographies. Certain geographies maybe need more beds. Time will tell us what is kind of a call we need to take. We can't do a spoke hospital, every spoke hospital 100 plus beds. But at the same time, when there is a need and requirement, we can kind of ramp up. So this is something which is kind of a fine balance which we need to take at the right time.
Sure, sir. And second question is on the differential between the rates between, let's say, 2 channels that we have, cash paying and insurance channel. So I just want to understand for mother and child care procedures, what's the differential for the patient? One is cash paying patient and another is insurance paying patient. What could be the rate differential for us?
I think, in the pediatric scenario, we are not mother and child, we are a pediatric hospital, and we believe that maternity is a part of the larger format of pediatric hospital. This is how we position ourselves. Mother and Children's Hospital are small boutique centers. They are the mother and child, which the capability is very limited in many things. So generally, an insurance company with a tie-up with us, our cash and insurance for more or less the same for the medical conditions, critical care and everything. However, there are some packaging which is done mainly in the obstetric side for the deliveries and those things. Definitely that, insurance, especially the GIPSA, they moderated significantly the what they are paying. That's definitely I can't tell you how much percentage-wise difference, they're significantly different from what we are trying to do is we try to provide better facilities for the patients who pay the cash. Obviously, we need to do that. So they'll be sitting in the deluxe rooms. These people will be sitting in the single private rooms. So we need to provide quality and also deliverables for people who are paying more. At the same time, insurance we have to respect because that's a large segment, and they've got a ability to kind of negotiate with you because of the large in size of the patient pool.
Sure, sir. Thank you.
Thank you. May we request all the participants to limit their questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Charul Agrawal from Bank of America. Please go ahead.
Hi, thank you for taking my question. My question is regarding the Hyderabad region. So we have already reached around 1,000 beds in the region. So I wanted to understand what is the kind of headroom you see for Rainbow in that region, and how do you determine how much capacity the region can hold?
Well, we have always done for demand and need. So the city has grown significantly in the last 10 years' time. So we have identified more geographies. As we identify more geographies, which are becoming kind of more of the micro markets, then we do hospitals in those areas. I personally believe at this point of the time we probably have got enough beds in Hyderabad city for next 3 years' time. So, but at the same time, I would not hesitate to add more beds if there's a demand and there's a further market is there. Because this is one city where the Rainbow is so super strong. Everyone knows about it. So people would love to come to Rainbow Hospital. So a lot of times, actually, my diligence is basically from the patient side comes. If the patient, more and more people wanted a Rainbow Hospital over there, we go and set up the hospital over there. Depending on the micro market, we see the size of the hospital. Whether the 50 beds would be enough or 70 beds are required. I think we have enough beds for time being now for the next couple of years' time.
Got it. Thank you, sir. That was my only question.
Thank you.
Thank you. The next question is from the line of Namit Arora from InGrowth Capital. Please go ahead.
Yes, thank you for the opportunity. So my question was around the Tier 2 opportunity. Now, clearly, you're very strong in the metro, and there is further demand. But from a longer-term view, let's say 5-year or a 10-year view, are you looking at any Tier 2 locations strategically, given that you have all the clinical excellence and domain expertise, and there may be demand for you even in the Tier 2 cities? Thank you.
Certainly, sir. We've been there in Vijayawada for the last 10 years, 15 years' time. And we have done one in Vizag. These are not small hospitals, actually. They're regional hospitals, which are kind of 100+ beds, about 125 to 150 beds. We've done in Vijayawada about 135 beds, which is one of the very well-performing hospital for us. It's a huge reputation. Now, we've done in Visakhapatnam 2.5 years ago. That's again doing well. Now the plan, we are doing a kind of a Rajahmundry, which is about 100 beds, which is a 100-bed facility in the project phase. And we are signed up in Coimbatore to do one more hospitals. So these are all significant cities in the Tier 2, which we would like to do. And also we have plans to connect the south strongly, which between Hyderabad, Chennai, and Bangalore, these cities. There are a number of Tier 2 cities are there. Eventually, kind of in 3 years down the line, 3-4 years down the line, we'll be connecting every 200 kilometers. There will be Rainbow Hospital to include larger population and also to kind of facilitate the emergencies to the regional spokes to hub hospitals. That gives us a kind of lot of leverage in terms of expertise and also transporting the sick children and babies. This is the plan.
Got it. Thank you for your very detailed thoughts. Very helpful. Sir, I have just one more question. Is there a focus on attracting international patients as well, given that, you have the clinical excellence, and whether it's, let's say, Southeast Asia or Africa or Middle East, Is that a market that you want to target for international medical tourism into India, or do you think the domestic opportunities where you are more focused on? Thank you.
Domestic opportunities are obviously very large. Internationally, of course, there is if you look at the international, like Indian neighborhood or Africa, the experts of Middle East, some of the Russian countries, they are like what we see in adult. The significant number of these countries are dependent on Indian healthcare. It's going to be similar with the pediatrics also. Even now, pediatrics are coming to various hospitals, like along they're piggybacking to adult and coming to the adult. So we started international business in the last post-COVID, and this year we are kind of expected to do about 3.5 to 4% of our top line coming from the international. So we actually have a separate team working on it, and we have been empowering directly having MOUs with the governments. Recently, we had done MOU with Tanzania, and we have already got some governmental tie-ups to Oman and some other African countries, and also done a tie-up with the Zanzibar last week. So we are actively working on that. This is one of the things that, like adult healthcare, eventually the children's healthcare, when you are able to give a lot, build to a kind of quaternary care more and more, the whole of developing world comes around to us.
Got it. Thank you very much, sir, and all the very best to the entire team. Thank you.
Thank you. The next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Yeah, thank you again. Sir, can you comment on the progress of the Madhukar Hospital?
Yeah, Alankar, it's a great question. So that remains on the steady note as we in the last quarter. What we have done in the Madhukar is that there is some change of leadership. We have brought a new leadership, and we expect them to drive the revenue and profitability from here. So that may take some 3 to 6 months' time, but all the right ingredients is already there now. We expect it to improve from here, Alankar.
So would it be fair to say that whatever challenges we have faced in the past, say 3-4 years, a large part of that has already been addressed, and it's just a matter of time? We are awaiting results from some of those initiatives.
Yeah, that's correct. So right ingredients is already put up. So doctor team, nursing team, management team, everything is set up there now. And it's a fresh leadership team. I think you will see the results in 3 to 6 months' time, Alankar.
And by that, because, if you can quantify that in terms of margins, how much time would it take, in your view, to reach the margin levels of, say, Bangalore or Chennai for this particular hospital?
Alankar, I think, Ramesh here, it would never ever reach the Hyderabad or Bangalore levels, because this is not a hospital which we have incurred the capexes, we have done the hospitals. Perhaps these beds are not included in any of our presentations or decks. These are the beds we do a medical management. So therefore, that the most of the capex, this is not a capex heavy bed for us. We are only doing a management of the beds. Whole 140 beds, what our initial investment was only about 40 crores, 42, 45 crores, 42, 45 crores. So, and second important thing is that, therefore, that we have engaged with the owner with a huge kind of the rental basis. The structure is slightly different. It eventually calculated as a rental, then huge cost goes there. Second important thing is it's a DDA property. It's a DDA property which is we have some free beds to do, but nowadays that with our government, we have definitely the free bed cost is going up significantly, about 60-70 lakhs per month. Thirdly, that your minimum wages are pretty high in this Delhi area. Being a medical hospital in a Delhi province with a high rental and the high HR costs and the high doctor costs in South Delhi, that's all about it. I think if you look at it as some other group of hospitals, which I won't go on to name, which have also got similar structures like other multi-specialty hospitals, So eventually, my dream is to do about 15% to 18% of the EBITDA. I would be super happy if I do 15% of EBITDA with Madhukar Hospital. What is that Madhukar has actually taught me? I'm in the great location of South Delhi, number one. Number two, I understood the Delhi market, whatever all the things. So it's given a kind of a huge experience for me to move forward, which is why we are doing more hospitals in Gurgaon, starting work place in Noida. So that's where we are supposed to be, where, as you said, that now we can expect our operating models to go like Hyderabad or Bangalore in those areas, not in the South Delhi or Central Delhi, because of a structural change issues and not being our hospital or brownfield or greenfield. These are the issues which we have been addressing. But top lines, we can make it grow to an extent, but bottom line is always difficult because of the cost structures.
Fair enough, sir. And that 15 to 18% which you mentioned is at the unit level. That is not Rainbow's share of margin.
Unit level. That's confined to the Madhukar. Madhukar does about 15% of the EBITDA is pretty good because the low capex bed being in South Delhi, maintaining that is good, pretty good. It adds value. There's some value being in the South Delhi.
What's the outstanding amount now, sir? And how much was repaid in this quarter?
So more or less remains same, Alankar. It's roughly 30 crore rupees, which remain outstanding there. We are not much worried about that. As Dr. Sir has explained, we are there for some strategic reasons and give us the learning. And some amount is also required for the working capital operations, etc. there. So I expect this, the whole loan outstanding which is there, it will take some time to nullify, but we are not worried about that amount which we invested there.
I understood. And maybe one last question. Based on the data which you provide in the presentation on the mature and new hospital split, it appears that mature hospitals have grown by about 12% top line in 9 months. But unfortunately, this data is not like to like, and hence it's difficult to know the exact SSG for the mature hospitals. Now, assuming the mature hospitals or the SSG data suggests about 11 to 12% top line growth in 9 months, just wanted to understand whether the growth rates would vary significantly across, say, Hyderabad, Vijayawada, as well as Bangalore, which fall under the mature leg for us.
No, so in Hyderabad now we will have some maturing hospital, right? And then Bangalore, Chennai, both are maturing there. So say, what is this like comparison you're not able to do because few hospitals keeps moving from the threshold of the 5 years to the new limit, right? So that may be not giving the right picture to you. You can separately engage with Saurabh, who is handling our IR. He can give the correct mix if like to like if you want to compare. He can give you some flavor on that.
Sure.
Thank you very much.
Alankar.
Sure, sir. Alankar, sir, you can connect offline with the management, please. Ladies and gentlemen, we will take that as the last question for today. I would now like to hand the conference over to the management for their closing remarks. Over to you, sir.
So thank you all the participants for the active participations and giving us the insight and the question and answer which we have been able to answer. If any of the participants feel that they have not got the chance or their questions remain not answered fully, they can connect us separately. The connect phone numbers and the email ID is already given in our presentation. So they can connect separately. We will be happy to provide all the clarifications which is required. With this, I conclude the conference. I thanks again for all the participants.
Thank you very much, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.